Welcome to the Passive Income Podcast. I'm your host, Dividend Dave. Please be sure to hit like and subscribe below and join the Passive Income Posse. Super excited for this episode. Joining me is six-figure investor. And please go ahead and give yourself an introduction.
Hi. First of all, thanks for having me. It's literally the first time ever I do this kind of podcast. It's going to be a great experience. I have a background in software development. Right now I'm based in the UK, and for a very long time, I think around maybe 15 years, I've been a software developer here. So first work for a bunch of startups, also bigger companies, like a couple of banks and a couple of retail shops. And then I moved to become a consultant. So in 2016, I started my own company. I sort of quit. Everyone was very worried about it, and everyone's been asking me, "Are you sure? Are you sure?" And if is my sort of rainy day fund big enough to handle that? And I quit and I became a sort of my own company software consultant. Uh, and after that, when sort of it went quite well, it was also the early crypto time. So I ended up working for a crypto startup as well, which allowed me for some exposure to that subject. And then I sort of started thinking, okay, so I did quite well, and the software thing, is not really anything. Like I do know my way around that world and these people and so on. And then I did make a bunch of money, and I became increasingly realizing that the money that just sits there is really losing value. And I did sort of calculate it, and it ended up being like 25, 50, pounds per day on the amount of money that I saved. So, it was sort of the time of COVID, and I was thinking, I knew inflation was coming, because by the time I was listening to some people talking, about all the handouts, about the printed money, and I realized, okay, inflation is going to eat my savings, right? The world is changing, and we moving away from cheap money and sort of 2% interest rates to something much higher. So then I decided, okay, I have to professionalize. So although I had an ISA, and I've been putting some money into it and enjoying the odd dividend, I said, hey, it has to be approached professionally. So I have to approach it as a portfolio and learn about it, decide between various asset types what I really want to put the money in. And software only helped, right? Because in the beginning I was also thinking, okay, maybe I can write my own automated trading system. I can collect signals and so on. And I did a bit of that. It wasn't hugely successful, but it's always the process. When you're learning, you're going to make those mistakes, learn from them, and try something else. So right now, 2024, I still do software consulting. It's increasingly on my own terms. So I do freelance as well. So I do sort of talk to clients, and I'm not always on their schedule. Um, and then I do manage my own portfolio, which is obviously a six-figure portfolio. And we hopefully getting to another zero at the end of it. And I learned a ton in the process. I did start this Twitter account, which you can see somewhere in my bio, Six Figs Investor. So I've been running this Twitter for maybe a year and a half. It's kind of a slow growing, but I'm also learning the ropes of how to talk about it, how to make it interesting as well, how to not make it too dry, adjusted for the audience. So that's roughly been my journey from a software guy to software and finance investing guy.
Wow, that's a great little recap there just in a few minutes. And there's so much more to dig into there. Before we started recording, I believe you said you were originally like you were born in Poland. I think that's what you said, and then moved to the UK. I think you just said about 15 or 17 years ago.
Yeah.
So that's quite the transition as well. And then obviously I'm not even sure how old you are, but 2016 seems like a pretty major life change of going from, whether it was a corporate job or whatever jobs you were working into. Hey, I'm going to now go out on my own and and dive into like my own business, and then at the same time getting into that crypto exposure. I really want to talk about that too, like working for a crypto company
Yeah,
and that experience. And then again, yeah, like you also alluded to there, COVID comes along, and yeah, the inflation, the writing was on the wall that was going to happen as soon as all the G7 countries like the US, Canada, UK, Japan, everyone else just started printing money. Well, of course inflation is going to happen when all of a sudden there's this just literally, trillions of dollars of more money printed out into the global economy. So, um did you kinda have a light bulb moment somewhere in there where you realized, "Hey, I've really gotta focus on getting" whether you just had it, like, sitting in a savings account or something, and then he's like, "Okay, I really need to start investing this because," well, obviously you're a very smart guy. You said you did the calculations of how much you were losing to inflation on a daily basis, so it's like, I guess what brought that on? What brought on that need to do the math?
yeah, yeah. Great question. So starting again from the inflation realization moment, I was obviously listening to podcasts from a brilliant investor, Cezary Głuch. So I do have this Polish connection. There's a couple of Polish people that I really do benefit from, which still primarily do their content in Polish, but they do have a global macro outlook. So he was specifically talking about the handouts in the US and
Right.
how the minimum wages are going to go up to like $14, and then who's going to turn up for work, given first the COVID scare, then how high the minimum wage is. So that's not a problem. But then also the handouts, right? So people would be happier to stay at home, collect the paycheck, and sort of stay away from COVID as well. So he correctly predicted that it will take even more money to then mobilize these people to return to work. Um, and that's sort of what gave me a pause. And I thought, okay, so if the inflation was this, then let's see what do I have in the bank account. And I I was just sort of collecting like 2-3% interest on this balance, which was six figures. And I thought, okay, this is like a serious amount of money. This is, if you read the savings more fire community, who are very stringent about pay attention to what you spend, like don't buy that latte and so on. Like that was 5 lattes. So I thought, okay, if you don't do anything, you're just giving up on losing, let's say, £50 per day on this inflation in buying power, right? And obviously, everyone heard all those stories when you discover some banknotes from 20 years ago, and then they used to be worth something, and now they sort of buy a nice lunch.
Yeah.
So, it sounds quite obvious, like to me right now, obviously, inflation, you have to link it, you have to buy at least inflation linked assets or something inflation beating and so on. So everyone probably listening to this podcast will say, well, obvious solution, right? But it really was not. And I had those conversations before with sort of fellow software developers. With I remember that we were sitting in a canteen, and these guys who started contracting in the UK, most of them would have a six figures kind of sitting on the balance in the bank account, because they would have to pay VAT, they would have to pay taxes at some point, and it's like a large 5-digit sum. So they would just have this money parked. And between sort of talking other let's say lunchtime subjects, someone said, okay, what do you do? Like, you have all this money parked, you're kind of paying interest on the mortgage as well. Is there a way to make some money on it? And everyone went really quiet, because if you like, not many people are well rounded in that sense that they will know about software, about investing, about taxes, about this and about that. So no one really had a clue.
Right.
And I that also gave me a pause. That was maybe
Because
uh,
this was a table of finance, or sorry, this was a table of software developers and
yeah,
engineers, and
yeah. Or
not
just
finance
thinking,
and money manager people, right?
yeah,
So I see the disconnect there. Like, you guys know
yeah,
all sorts of stuff about software and coding and software development, but over on this side, okay, we're making all this money, but what do we do with it?
exactly. Like people, like best answer was, yeah, I just want a motorcycle, so I guess I'm just going to buy it. And maybe it wasn't such a bad, because I think this guy wanted to buy a classic one, so maybe without meaning to, he actually bought an appreciating asset. But overall, the sort of awareness of what the possibilities are was very, very, very low.
Right.
And I became convinced that this is sort of like a pouring into an empty bucket, right? You're making all those money, and the more you pour, the more it leaks if inflation goes up. So you have to professionalize. Again, I would say that you have to learn about money, as you know, how this whole thing works. That inflation is a hidden tax. That to devalue the national debt, they don't mind inflation to run for a bit, because that devalues those trillions or billions, in the UK
Right.
that they borrowed. So we have to learn about those forces, right, to progress to the next level. Because I also did not ever want to become, a contractor who works until the retirement age, and then kind of retires at the end of it with 2 million. So my ambitions were always a bit bigger. I thought maybe I would hire some people, they would work for me. So I did have those ambitions to build up my knowledge and understanding as well. And that gave me a pause, and I said, okay, what can I do?
Yeah, and I think that's a very interesting point that you made. You have this money parked in a savings account that is making 2 or 3%, and when inflation
Mm.
is at, say, 2%, which is kind of the target for most countries, they just want inflation around 2% uh, for a lot of different reasons. So you're basically barely keeping up, or maybe slightly by 1% outpacing inflation. And then you realize, oh, inflation all of a sudden for those 2 or 3 years sort of post-COVID went to, 6, 7, 8%. I think even a few months here in Canada, we were at 9% inflation. And all of a sudden you're like, wow, if inflation is, let's just throw a number out there, 7%, and you're making 3%, it's like, wow, I'm losing 4% just to inflation alone. So I love what you just said there. It's a hidden tax, and it truly is, right?
It is, yeah.
So that's interesting. That's on kind of an awesome roundup, or uh, you know synopsis of why you decided to, like, start learning about investing. And then somewhere in there too, I want to get back to that crypto experience and working for a crypto company. And I'm assuming you were doing, like, the coding and development for them in that.
That's right, yeah. So do not specialize in sort of database and backend coding. What I do is more sort of UX experience. Uh, and my second contract, when I became a software consultant, was with a crypto startup in 2017, early 2017. So I did hear their CTO was a guy who was very much sort of invested into the whole scene, and that was the time when Ethereum was forked, I think, from Ethereum Classic to what currently is Ethereum, because
Right.
they had a hack, as I remember. So that was very, very early. And obviously, not many people even knew about Ethereum. And whoever did know thought that obviously they had major issues because of this fork and this hack. It just didn't have a very good perception. And I think Bitcoin was a few $1,000s.
Yeah.
Um, and I did learn quite a lot about it through the process. I remember that we worked on running the blockchain nodes locally, and doing all of that, and it was massive amount of data, completely sort of crashing our computers and so on. Um, and I did invest. I became convinced that there is something to it. There is something, solidity, smart contracts, being able to, let's say, automatically execute contracts based on the oracles, right? Because the promise was that, for example, back then, that Ethereum could be great for something like insurance companies, where if something happens, you could insure, and then if that event occurs, it's sort of without human intervention. So the oracle will just check whether this happened or not, and it will automatically send money to you, right? So send the premium. That was sort of the narrative, which I don't think it materialized, but that's how I remember it back then.
Right.
So I did had a bunch of money from my sort of software business that I run on the side, and I'm still running it. And that was pure profit. So I decided let's buy. So I did make some money on crypto, but it was still, I think it was high 4 digits, low 5 digits kind of money. I did triple my money, but I didn't hold. I mean, I wasn't convinced enough to
Right.
hold, especially because the company that I worked for sort of didn't turn out to be the best company. They did survive. I think they're still around, but a lot of stuff we were doing, I later described like we were a bit like a bunch of web developers starting a bank, because a lot of stuff we were doing was about converting fiat currencies to crypto, and then all the issues that you have with being able to trace the money, which blockchain actually solves, we were trying to solve using the old technology, and so the database, right?
Right.
And I know for a fact that there are still a lot of companies who have a connection to crypto assets and to blockchain assets, and behind the scenes somehow they resort to just database technology, which does not have this traceability. So yeah, you have to find the right ones. You have to separate the good from the bad in that industry. So overall, it was for me a very positive experience. I did learn a lot, and I did make some money on it. I didn't end up, unfortunately, holding all that crypto um, until now, but I'm back in the game with better understanding, and I think as of, because I do those on Six Figures Investor, I do a portfolio update every month. So I just hit double digits. So I have 12% of my portfolio right now in either directly crypto or in crypto linked assets. So
Right.
that would be the ETFs, specifically BlackRock for me, and companies like Coinbase.
I think that was great timing too, like 2017, just a few years before. Sort of, I call it the crypto craze of 2021. And that was right around the time that Bitcoin skyrocketed there to its all-time high, 2021, or maybe it was early 2022, and then kind of the bottom fell out when Bitcoin crashed down to below 20K USD. And obviously, the rest of cryptocurrency just sort of follows what Bitcoin does. If Bitcoin goes up, the rest of them generally go up as well. When Bitcoin goes down, the rest of them generally go down as well. So, um, very interesting timing in that time frame of 2017 up until whenever you sold out. So, like you said, you were able to make some money, so that's good. Obviously, you always want to make money and not lose money, right?
Pretty much. Yes, I think that was the first great rally. So I think Bitcoin then topped at 16, 17K. That was the first one. Then we had this dip, and then we went to 64, I believe, and then went down to just slightly under 20, 19, 20.
Right.
And right now we headed for, well, who knows,
Yeah.
100, 200.
Yeah, with the Bitcoin halving coming up, it really does look like it's heading for another all-time high, and who knows what that'll be, whether it does make 100 grand or over 100 grand or who knows what. But um,
Yeah, and the time is very different with the ETFs. There's a bunch of them. I think at least 10 were approved, and obviously BlackRock and I think State Street is there. Vanguard didn't decide to go in for some reason, and no one had anything nice to say about that. Um, Yeah, I think this time is very different. And I think we things like pension funds and other funds that would never ever touch crypto. Right now, it's very easy to them because if it's SEC approved, it's obviously good. Looks like we also have an Ethereum ETF in the pipeline.
Right.
So the overall narrative is very good, and I think 2020 this year, 24, is going to be good for crypto. Um, I have some worries. Like overall, I only have 12%, and I'd probably get a bit sweaty if I get to 30%, 30, 40%.
Yeah, of
I,
course, right.
yeah,
That's a big part of your portfolio if all of a sudden you're getting
yeah,
close to half at 40%.
yeah. Like I see down the line with crypto, there are some things to watch out for as well. So I am not a guy who would say I'm not a BTC maximalist like some people are, where they sort of start counting everything in how many bitcoins they have.
Right.
Overall, my portfolio is a multi-asset portfolio, and I think this reflects my curiosity because I just love learning about various types of assets, and I do see the point in holding almost all of them if you know something about them. With NFC being the famous exception, I would never go into those unique or not very unique pictures or
Oh,
other.
NFTs, yeah.
Yeah. So that's one step too far for me. I do see the point in growth, dividend, Bitcoin, gold and silver, energy, uranium. I do have a couple of percent in uranium stocks, and I do follow those trails, whatever they lead me, and I do learn about this stuff. And if I see potential upside, I think that's the key, right?
Yeah.
The balance between the risk and the upside, at least for me. Then I do allocate a couple of percent to that.
Yeah, that's actually a great segue into the other 80 other 88% of your portfolio that I'm very curious about. First, right off the top, you mentioned, gold and then uranium, so I'm very curious, your thoughts on the mining sector in general, and I guess in particular gold and uranium or any other, precious metals and whatnot that you may have.
Sure. I would start with uranium. I mean, it's such a interesting segment, and you can look at it from so many perspectives. So I don't know how many people know this, but it's effectively a duopoly right now between the Kazatomprom and Cameco in Canada, right? So they
Right,
probably own, between the two of them, 80% of the supply chain. And before Fukushima in Japan, there was a bunch of uranium startups, and it looked like the nuclear energy, like we're going to quite smoothly transition into it. And obviously, after Fukushima, there was a big panic, and everyone dropped those prospects to build the new nuclear stations. And most of those companies were either merged with the big ones or went bankrupt. So at the moment, we're still very early, and you kind of see mixed signals. So you see like Germany saying we're shutting down all nuclear, and at the same time, UK and France building new ones, and China obviously. So we're still in this kind of mixed signals phase, but the way I understood where we're going with the energy transition is that if we want to consume as much energy as we do, and I'm looking around, and the amount of energy eating gadgets here, including my satellite GPS watch, is huge. And we only creating more, and they all necessary, because you can't sleep right now without a gadget on you measuring how well you sleep, right? So I think this energy transition has to have nuclear as a component, unless we're going to suddenly become this Kardashev type 2 civilization, where we're going to send solars into space that will beam energy back to Earth, but I don't see that happening in 2025. So I think we're going to go through nuclear, and then we're going to achieve a bit more in that space. So I think right now uranium costs around $97 per ounce, and at its peak it was 150, I think, before Fukushima. So even if you like, and we had this all this inflation on the way, so we're not even close to the top. So I am still holding. I think what's going to happen is we're going to build more nuclear plants and base more of the energy on that. And what's interesting about uranium is, even though the price can double or triple, overall the energy produced from it is so cheap that it's not, the elasticity of that price is really high. It's not a problem. At the same time, it's a necessary ingredient to keep the plant going. You cannot just not buy uranium and choose another element. You have to keep running on it. And at the same time, in the grand scheme of things, it takes much more to sort of kickstart a nuclear plant, and then that supply of uranium that you need to buy is still a minuscule cost, even if it costs $1,000 per ounce. So that elasticity, that ability of uranium to move is quite big, and that is my understanding of it, and that is what I believe is the upside for uranium miners.
Yeah, I have seen some headlines here, and honestly, I haven't not followed it because I just am not educated enough on the subject. But I have seen some headlines here in Canada about new reinvestments into nuclear energy, whether that's retrofitting, existing plants or even building new ones. And kind of to your point too, we're a long way away from going completely renewable with solar, wind, geothermal, whatever. And yeah, I definitely see the nuclear power plants as being a huge part of energy for the next however many years, 30, 40, 50 years for sure, right? If not longer.
Yeah, that's right. Yeah, I think you have to at some point decide whether the declarations made by all those international organizations, whether you take them seriously or not. Uh, the electrification of cars, right? Like, because on the same on the same side of things, there is copper. And again, we did not have a technological breakthrough that would allow us to ditch copper and start, putting all these power grids, I don't know, on graphene. I mean, every now and then you see a headline, but then to do it in a lab and do it at scale is very different.
Right.
And copper sort of has the same trajectory, in that if we were to deliver on that promise of electrification of everything, especially transport, there's not enough copper, and there's not enough copper in sort of on the discovery phase. Like you have those big miners like Rio Tinto scouting around and they don't even have enough potential locations where they don't even know how much copper is there. So the price of it, if we're going to continue to go in this direction, it needs to go up. I mean, copper is so cheap right now; it's something like $5 per ounce, or not even that. So I do have exposure. I think my most recent exposure to commodities like that is 15%, and also most of them are very cheap, which is, even after after inflationary period, they still so cheap. So that's one that's potential for an upside. And then you hear those very plausible narratives that everyone keeps spinning, and you have to decide, I mean, are they all fake? Like, we're not going to do it, we're going to stay in coal and so-called fossil fuels, or are we going to do it? Because if so, they will be more expensive for sure.
Yeah, you make a great point about copper and like you mentioned, the electrification of cars. Like EVs take, I believe it something like 3 or 4 times as much copper to build an EV than any other type of car, or obviously an ICE internal combustion engine car. So yeah, copper. If we're keep going down this EV path, which governments want us to do and whatnot. So yeah, the copper situation is definitely something to keep an eye on here, just even in the next 10 years, right? Like I know here in Canada, there's a push to have, huge electric car domination, I guess is for the lack of a better term, by 2035, which is only 11
Right.
years away.
Yeah.
And I mean, this is very interesting talking about mining. And obviously, honestly, I don't know a lot about mining, but I do know that obviously here in Canada, the mining sector is a huge part of our natural resources, right? So it would
Yeah. So
probably be good for
on
the
Australia,
Canadian economy.
Canada and Australia, they sort of if we talk about currencies as well, right? They consider the commodity currencies, right, linked
Yeah.
to everything that you can extract. So gold and other metals as well.
Oil and gas for sure as
Yeah.
well in Canada.
Yeah. Yeah. I know my bit. I don't really know a huge amount. Like the other energy sector, I don't know as well as uranium. Although I was listening just this week, because traditionally the sort of fossil fuels company, Chevron and similar, BP, they've been considered a nice dividend companies, right? Where you can sort of park money and collect a hefty, let's say 7-8% even, depending when you go in. And one thing I heard is, despite, let's say, projecting that they do not really spend a lot of money on researching the energy transition, which is quite interesting. So looks like what they're actually doing is distributing most of the earnings through those hefty dividends, and perhaps in the process becoming dividend traps, where they will not transition, and there will be someone else coming and sort of there will no longer be those companies everyone relies on. So that's an interesting opinion I just heard very recently. I do have some exposure there, but it's not as big as, let's say, uranium. So what I think is the future.
Awesome. You brought up dividends, and obviously, I love my dividends. I have it in my name. I'm like, I just love seeing that
Who
money.
doesn't? Who doesn't?
I just love seeing that money, just the cash roll in, whether it's
Yeah,
I have a lot of monthly dividends and obviously quarterly dividends. So just, on the 16th of every month, and all of a sudden there's just more cash in my account than
yeah.
I can reinvest. So is that definitely a part of your strategy as well? Just getting those dividends rolling in and reinvesting them?
Well, yes and no. So that's one of the biggest sort of stories. So I guess when I started, one big influence, sorry, would be the fire community, people like Mr. Money Mustache and others who would tell that story, right? That all you need to do is keep buying dividend companies, DCA, and they will keep growing, and so on. And then you know later on, I was able to add some color to this picture, uh, and where I am now is I do have around 20% allocation into what I call value companies, and which mostly pay dividends, and those dividends are quite decent. But they are stabilizers, because they have smaller volatility compared to the growth companies, right? Where the upside's huge, and when everyone thinks this is the next AI company, this is where money flows. But the value companies, like the industrial companies, obviously, they do stabilize the value of the portfolio. They don't really go down, because everyone would buy if suddenly their price would mean that they pay, let's say, a stable 10% dividend, which actually some of them do. However, I do not optimize for owning the maximum amount of dividend paying companies. I do not do that, and there are many reasons for that. So first reason is, I think we at the beginning of a growth cycle with the Fed, most probably having to lower the interest rate this year because their coupons are growing and they cannot. It's like a big buffer, right? Where now the interest rate is like 5%, 4%, so they have to pay that coupon, but that money has to come from somewhere. And even I think Jerome Powell said something like that US long term is on a what did he say? Unstable or unsustainable fiscal path, right?
Right.
Meaning the same thing, that they cannot continue to maintain that. So everyone's hoping for that, and that would be good for companies who are growth companies. So they take cheap capital and grow. Um, and it's just numerically. I mean, I know that because I've seen one on the podcast when you discuss the same thing. Just numerically, it makes more money for you. And I'm in my early 40s, and I still work, and I'm in that growth phase. So I do want to literally maximize the value of my portfolio. And then when I think I hit that number where I can comfortably just live off dividends and cash flows, then I will move money into, well, and then will that be dividend companies? Because I came across this concept created by, I think, Meb Faber from Cambria. He talks about shareholder yield rather than just dividends. And he says the way that actually he wrote a book about it. So I'm just going to summarize the book in a couple of sentences. He says the way companies sort of pay back to shareholders is not just dividends, it's buybacks and paying off debt, preferably the debt that costs them a lot, so the high interest rate debt. And that's how between these three, shareholders see value flowing towards them, right? And he created an ETF, SYLD, based on that premise. So it's companies that maximize dividend, buybacks, and paying of debt. And I looked at the performance of this, and it approximates S&P, um, and also intellectually this makes sense to me as well. So this is sort of what I'm thinking about, as opposed to just a dividend ETF. And on top of that, there's options trading, right, where you can generate I was going to say easy cash, but you can generate cash uh, selling those puts and covered calls, which is also something that just last year, so not in the beginning of my journey, but when I sort of knew my dividend stock from value stock, then I started looking into options trading. So I think there are strategies beyond dividends to generate cash flow, because it's really about the cash flow. You said I like my, and I don't know if you have it set it up as a transfer or just appears in your account, but you like it to have it regularly to cover your expenses. Um, Actually, tell me, is that a dividend portfolio? What sort of, and how did you make it so that it pays you every month?
Basically, a lot of the REITs here in Canada are monthly dividend payers. So I'm actually overexposed to REITs and really took a kicking in 2023 because of those high interest rates that we've already discussed. So, um, not the best. It looked great in 2021 and 2022 when the market was going up, and then when the market went down, it didn't look as good. And when the interest rates went up, the REITs in my portfolio really have taken a beating. But yeah, so most of those are those monthly payers, and I definitely do get your point, and I understand the point of a company that buys back shares and pays down debt, because that is obviously fundamental as well to increasing or the share value, the actual price of individual shares, right? So I definitely see that, but again, I'm kind of on that. I definitely kind of went down that dividend rabbit hole as well. And so, yeah, basically now I'm sort of more focused on a lot more of the quarterly paying. Um, what I guess we would call the blue chip companies here in Canada, the Canadian banks, the Canadian telecoms, and a few others, or as we alluded to some in the oil and gas and energy sectors as well. So that's just kind of the way I've I've set it up. So that's the quick answer to that.
Yeah, and there's completely nothing wrong with that. So I do know someone who has seven figures in the tobacco companies, and they do pay 8-9%. It's it's debatable if there is a big upside. There are some stories sort of pointing at vaping, or in case of BATs, British American Tobacco, they have this stake in some Indian companies that is potentially very, very valuable. But yeah, there is also always the question of, is that as they call it, a value trap, right? Whether it's going to continue pay that 8-7%, but it will be off a smaller and smaller and smaller valuation of the share, which I wouldn't like to see in my portfolio. So I do try to have this rocket fuel of growth companies as well.
Yeah, and I kind of wanted to get into that sort of the diversification of your portfolio. Obviously, you sound very diversified, and I'm kind of curious. Like, you're in the UK, I'm in Canada. Obviously, the entire world is influenced by the
Yeah.
US and what the US does, and so I'm just kind of curious. Like, do you have a lot invested in the UK or European companies, and then on another side, like more over in the US, or how does your portfolio break down? I guess geographically, geopolitically.
Excellent question. And I do, this is one of the main things that sort of keeps me awake at night. Well, not really, but historically, when you start to learn, you will be influenced by your geography, right? If you are an Austrian investor, you obviously see your local media, your newspapers, people talking about primarily, well, there's also Nvidia and the global events and Google, but people also talk about the local companies, and you might be tempted. And I think there are advantages to it. For example, my setup right now is obviously based on the UK tax wrapper, which is called an ISA, and I do have all my personal investments inside that wrapper, and that obviously gives me a tax-free gains. Both, well, on UK companies, I do not pay any tax on dividends, which is fantastic, and they do pay quite a lot of dividends. So because of those home biases, so you have expanded knowledge, because you know that you literally interact also with the products of those companies right now. Yeah, you know what's what. So I would say it is advisable, mostly for the tax reasons, if your country sort of has this system where you will not pay dividends on not pay taxes on the dividends coming from your home country. This can beat even American, let's say, dividend aristocrats, who may pay you a bit more before tax, but after tax you kind of may end up with less. I'm just checking my UK market exposure, which I recently trimmed, and I will get into the reasons why in a second, is 8.3%. And they mostly value, because this is the UK market right now. Like, we don't really have that many companies known for innovation. We have ARM, who does chips for Apple, and that's a very short list of well-known UK innovation companies, right? Other than that, we do have a lot of global miners like Rio Tinto, which is actually a well-run, diversified geographically company, and also diversified in terms of where they sell to and what they mine, because they not only mine, let's say, iron ore in Australia, but they are in South Africa. I think they also are in Canada.
Yeah, they definitely have operations here.
So if you want to have exposures to mining at all, I do recommend Rio Tinto because it's a diversified company in itself. So you almost don't need further diversification because they are in so many countries, and they obviously took a bit of a hit because of China, because of the China property crash, which then caused the price of iron to fall, and that's the main thing. But because they also do copper and other stuff, the price sort of oscillates between, I think, 45 and 55 pounds, and it never, there's not a panic like on some other stocks that like Sibanye Stillwater, which is a gold mining South African company. So yeah, that's about my UK exposure.
So overall, your UK exposure is relatively small, like 8 or 9%.
It is I would say, well, looking at US, it's harder, I would say, to calculate exposure because I do have a couple of percent in semiconductors, and then that's your Nvidias and Qualcomms and so on. And then is that a US exposure or is that a global exposure? Because everyone's buying those chips. That ETF also has exposure to Taiwan, apart from Nvidia. So I would say with a lot of companies I have, even though they incorporated in US or UK, I do pay attention so that their supply chain and their clients are as widely spread as possible. So in that sense, it looks like I have a big chunk in the UK, but most of my UK companies do business everywhere, like the
Right.
Rio Tinto, like the tobacco companies as well, HSBC, Global Bank. I tend not to pick companies that only operate in the UK because I don't think the prospects for the UK economy are that great the way I see it here on the ground. I think they do talk about bringing changes and being, second Switzerland and whatnot. For now, I haven't seen any action here, so I do not overinvest in just UK companies only doing business here.
I think you could make that point about a lot, and I mean a lot of American companies. You mentioned Nvidia, but there's so many, like you said, incorporated in the US, but they're global companies: Apple,
Yeah,
Microsoft,
yeah,
McDonald's, Coca-Cola, Pepsi. Like the list kind of just goes on and
yeah.
on, right? Like they're so I definitely see your point there of like encompassing the entire planet, the whole world, right?
Yeah, that just makes a lot of sense. I mean, the world's becoming very divided. You have those new blocks like BRICS. You have Russia, you have China, you have all that dynamics. You have countries in the middle. I sort of tweeted about it a couple of days ago, where you have a couple of countries that they seem to try to play this situation, like India, Brazil, Japan, Kazakhstan, where they trade a bit with Russia and then maybe they repackage that and sell it further and so on. I think they could actually be quite better off from doing it. So I also I did have some Russian companies and I still do own them. They mostly frozen and sort of staring at me at minus 90%. But I did not sell those that I didn't have to. So yeah, in that sense, I am truly globally exposed, and sometimes because of geopolitics, it brings those losses. But I think overall, it is still worth it.
Yeah. Yeah, so when you say the Russian assets froze, that's due to sanctions, or you had to sell some due to sanctions?
So what happened is very shortly after the conflict started, so 2 years ago, assets that were predominantly controlled by Russian people or companies were effectively frozen in the UK on the exchanges. So you still can see them on the balance sheet. Interestingly, the price also fluctuates. So there are some trades going on, maybe on the Moscow exchanges, maybe OTC, over the counter, but
Yeah.
sort of ordinary, because I still classify as an ordinary retail investor, we cannot really touch them. Probably I could sell them if I really tried at minus 90%. But then
Which is never fun to
it's
do
never fun
that.
to do. But what I'm hearing about Russia's economy is actually quite positive. I mean, don't know if you followed Tucker Carlson going to Russia and sort of making a couple of videos. Apart from the interview, he sort of made a couple of videos about an experience of an ordinary Russian citizen, and I believe they're doing quite well. They also always have been a commodity country, primarily with oil and gas, but also it's such a vast country like Canada that
Yeah.
they almost self-sufficient. So looks like they managed to through that, through having lots of resources and striking those deals with China and Kazakhstan, potentially Japan, potentially Brazil, India, to maintain a sort of decent basic level of the economy going.
Right.
So yeah, I do plan to keep those assets and sell them after the war. And I would like the war to end. I would like some kind of peace treaty. I think that I don't want one side or the other to crash them. So I am a very sort of peace oriented person in that sense. I think that there could be a peaceful resolution of that conflict.
Yeah, I would agree with you there. That would be nice to see, just have it come to an end at some point, hopefully soon. So, but interesting. No, I did see some of the interview of Tucker Carlson, but I didn't really watch any of the other videos that you mentioned. But that definitely does sound
I
interesting.
do recommend Tucker Carlson in a Russian supermarket, discussing prices and sort of available choices. That's a good one.
Right.
Yeah.
Before we wrap up, I see we're already pushing an hour, and it's been a great conversation.
Really?
I do kind of want to talk to you about sort of your job. As I know we talked about it a little off the top, but I'm kind of coming back to like a software developer, software engineer. You know, you picked an in-demand, high-paying career. So right away, you're setting yourself up where a lot of other people maybe just don't have the skills to be
Yeah.
able to do that. Um, so do you definitely see like do you see yourself as I don't know if lucky is the word or just something that you worked towards to get into that field. Like I said, software development and software engineer are high paying in demand job that is very much needed, right? Everything runs on software these days. What we're using right now, software, right? So um I guess I'm just kind of curious what your thoughts are on sort of that your chosen career path compared to anything else, right?
It's a fantastic question, and I sort of wish you didn't remind us of the time just before the question, because I could probably talk for hours. I think it is a complex subject. So software sort of fell into my lap. When I was finishing high school, there was this competition to create a website, and it was a European Union project. The idea was that three different schools from three different countries will collaborate over the internet and together create a website. So I did end up creating that sort of Polish part of this website, and mind you, before that I didn't know how to do it. So in the process, I taught myself, but there was no one really telling me that I need to or I should. I was really drawn towards it. So there is something in, because software is a craft, in this craft, that when you are able to make things happen and you see things changing on screen, for example, if you could write a simple game in a programming language that you're learning, and you see things happening, If that's for you, you will be naturally drawn into it. You will continue exploring. You will continue pushing yourself, and it will feel like fun. And that's exactly what happened to me. So for almost 2 decades, it did feel like fun. Later on, with all the politics in software and changes, it maybe started to feel less so. So I would say this drive towards making money in more business oriented way was also influenced by that. um, so I'm saying, but I'm not saying follow your passion here, which is interesting. I think, yeah, okay, you could say that it was luck, that it turned out that something that later on became profitable became my passion. But that's sort of not the advice I would give. I would say, if you come from a sort of underprivileged background, somehow go first towards a more profitable skill. And it doesn't need to be always software. It could be, selling something or making something that people currently value a lot. So the high quality coffee, like a coffee roastery, or even selling property. I mean, I know it sounds very easy to say. I know those things are not always easy for everyone to learn. The reason why I'm saying that is because at some point I had this idea, because I also have a passion for music. I had this idea to become a singer, specifically classical music. And I went to do a course, and I saw, and I was an active software developer at that time. And then I went to do this course as a beginner singer, and I could see other people in this career who was very passionate about it, and I could see what sort of job prospects and what sort of career was opening up for them. And I can tell you straight away, it's like 10 years of almost not making any money, and if you survive, you might go big, and then I guess you will pay it off. So I see that following your passion is a strategy if you already think that you can finance it. Otherwise, for the majority of people, it might bring a quite a difficult life, and if you want it, that's fine. But my advice would be, maybe, but if you don't have a lot of money, like no trust fund, like I didn't. I come from a single parent home, so I came to the UK with zero. So if you do not have the trust fund, try to balance the passion with a more profitable job. And I just leave you with that. I know it's not easy to execute on, but that has been my experience, and also that's what I've seen around me. What happened to people
Right.
who tried this and that.
Yeah, following your passion can be can be a huge gamble,
Yeah,
basically
yeah,
is what
yeah.
it is, right? Like, you know, you mentioned classical music, maybe you're a classical pianist or violinist or something, and hey, maybe you make it to the Sydney Opera House in Australia,
When you're
but
39,
that's probably very, very small chances,
yeah,
right? So, it's just same as when you're a kid. Everybody, when we're kids, we wanted to be professional athletes. Like here in Canada, all the kids want to be hockey players, and in Europe, everyone wants to be a soccer
yeah,
player, and in the U.S., everyone wants to be a baseball or football player. And it's only a small percentage of kids that actually make it to those professional leagues. So,
yeah.
following your passion can be a very big gamble. So I would agree with you to find a profitable skill or a more in-demand skill like the software development or like you said, sales can be, very high paying jobs as well. So
Well, but also looks like we actually the whole pendulum swung, and looks like now software developers, well, we will not be obsolete. We will not be made obsolete by AI, but we don't have enough plumbers, right? Everyone's talking about it, that you cannot get a cheap and skilled and reliable and professional handyman. It's impossible. And they will, and they probably already do, command similar hourly rates And
Yeah.
you know, there's nothing demeaning about those jobs, and I you know, I like doing things with a drill and stuff like that. And if you're good with your hands, you can really make tons of money. You can create, you know, six-digit capital and then start investing. If you go for a few years into something like, I met a guy who does scaffoldings. So he doesn't build anything. He just provides the scaffolding next to the building where the builders can
Yeah.
safely climb on. And he's just quite good at assembling them very quickly and disassembling them very quickly. And it's super profitable to him. So there are options, I think, in that space, because I don't think we're going to upload our consciousness into Dropbox very soon. I think we're going to remain people, you know, with physical bodies who need heat. They need kitchens. We need toilets. We need showers, and there's good money to be made in that as well.
Yeah. Tradespeople. That's a great point. Everything you just mentioned, kitchen, bathrooms. Yeah, you need plumbers, electricians, HVAC people, and roofers, landscapers, and everything in between. And so, and another great point there is you don't have to go $100,000 in debt to get that education. You
Precisely.
start as an apprentice and you start making money pretty much right from the day you start as an apprentice. And then obviously once you're through your apprenticeship, then you can get into, like you mentioned, making some really good money.
100%. Yeah.
So definitely shout out to the tradespeople out there.
Yeah, we're very grateful for what you do, because then we can, you know, sit on our laptops and buy and sell and enjoy the radiator, you know, going off.
Yeah, exactly. Wow, I see we're already at over an hour, and it really does feel like we could just keep talking and talking here. Um, Before we sign off, just a few more things. First, I'm just going to give a quick shout out here. Receive a free passive income posse. Turn that cash register around coffee mug with any purchase over 100 Canadian dollars before taxes and shipping at buyinvestingshirts.com. Use code word posse for a 5% discount on your purchase. Link in the description below. And again, just before we sign off, and I know we've already talked about a lot and we've covered a lot of topics, but I just kind of want to open the floor. Is there anything else you want to say?
Do you know what? I no, I feel the questions were so excellent and just, you know, made me talk about my whole journey. So yeah, I just want to say there's probably a link in the description to my Twitter account where I'm sharing
Yep, there will
my
be for sure.
portfolio updates on a monthly basis and discussing the latest developments. And I would say, you know, if you in a similar situations where you made a bit of money and you kind of, you know, you starting to think that maybe your money could make you more money, because you know you could maybe start slowly transitioning from just selling your time to making that capital work for you. Then, you know, listen to Dave's podcast and follow him on Twitter, but also follow me, because I'm on this journey and it's still quite early for me, right? It's been maybe 3 years of me really giving it a proper run. So see you there.
Yeah, awesome. Yeah, I definitely will have your Twitter handle linked in the description below as well. So check out Sick Figs Investor on Twitter. And I just finally thank you so much for coming on and spending time with me here on the Passive Income Podcast. It's truly appreciated. And I know that the audience will get a lot from our conversation as well.
Thanks, Dave. Thanks for inviting me. It's been a pleasure.
Awesome. And if you're still here over an hour later, please be sure to hit like and subscribe.